Good afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. I'm Sakshi Batra and this is 3 p.m. where we are going to be getting you all the market closing action. But let's start off with the what's hot as far as corporate and the financial space is concerned. Record high gold prices keep buyers away. Demand for gold jewelry in the July to September quarter is the lowest since COVID 5 years ago. Overall demand also dips. It's also down 16% on year. But gold as an investment gains popularity with a 20% jump from last year. Nifty refuses to hit new highs after yesterday's rally as profit booking pulls down major indices, tracks weak Asian markets after US Federal Reserve says it may not cut rates in December. All sectoral indices are in the red, led by metals and FMCG. There's no stopping the IPO frenzy on the Lal Street, even as Lenskart gets ready for its 7,300 crore rupees issue, which opens tomorrow. Budget broker Grow has announced its 6,600 crore rupees issue as well. Gadget manufacturer Boat also joins the fray with 1,500 crore rupees IPO. Hindalco India, which makes MTR ready-to-eat foods, is also meanwhile fully subscribed on day 2. US President Donald Trump has announced a 10% cut in tariffs on China, bringing down the fentanyl-related penalties after talks with his Chinese counterpart. Claims also breakthrough in the areas of soybean as well as rare earths. China is silent on the big takeaways of the summit in South Korea. Elon Musk's Starlink is all set to make its mark in India, leasing office space in Mumbai. Its first official presence in the country. The company also begins technical and security demo runs before it launches its high-speed terrestrial internet network. Let's straight away talk about the stock markets in the last half an hour of the trading session today. Well, as we had marked out in the headline for you, all the sectors are actually down in the red in trade. Of course, deeper losses can actually be seen on the banking space, financial services as well. The broader markets are also down in trade. This is also being led by the India VIX, the only index that's in the green, 1.3% higher in trade at over 12.1 odd levels. Now, when we talk about the Nifty movers, the index is down in trade, and the stocks that are leading the losses from the front are Dr. Reddy, Cipla, remember the earnings play there. There's also HDFC Life Insurance, Bharti Airtel, IndiGo and Power Grid as among those top laggards in trade right now. But those stocks that are still managing to keep their heads above the water and keep themselves in the green are Coal India, L&T, Bharat Electronics, Nestle, Hindalco and Ultratech Cement, all of those stocks that are still hovering about 0.5% higher in trade. Now, when we talk about the kind of laggards that we are seeing in the F&O space as well, you will see names like Steel Authority, REC, even CG Power, Cipla and Tube Investments as those top laggards from the kind of losses that we are seeing. Look at Vodafone Idea, Sharda Cropchem, LIC. These are all the top losers in trade today. Dr. Reddy's, NMDC Steel and IDBI Bank. These are all the laggards that you're seeing at this point in time. But let's quickly go across to our guest on board. Mr. Avinash Gorakshakar is with us, market expert, to help us understand the broad view on the markets as well. Warm welcome to you, Avinash. Good to have you yet again with us. Help us understand, what do you make of this constant profit booking we are seeing whenever the markets are attempting to move above the 26,000 mark? What does this really show about the current tenor and texture of the market?
Yeah, I think, Swati, first of all, let me tell you one thing, that this profit booking is largely because of the fact that, I think we keep hearing the US tariff news flows, and I think the day some new development happens, the markets gets excited. Overall, I would say that, I think the China-US deal is happening very rapidly, so we are not very far away. Maybe by the end of this month, we could get a little bit of clarity, and that could be a very major trigger point for the market. And another reason why the markets are down, you see a lot of profit booking, of course, is also because of the fact that there's a lot of primary market supply paper which is coming into the markets. This month is also, that is the month of November, is also going to be a very busy month. almost 40,000 crores is going to be raised from the primary market. So there is some inherent pressure on the secondary market, because typically what happens is people apply in the primary market and book money from the secondary market. That is the primary reason the markets are not, convincingly crossing the 26,000 level. I think as soon as the markets come to, the index comes towards that level, there is a lot of profit booking which we see. But I think the good part is Q2 numbers have been better than expectations. We have seen a lot of sectors like banks, capital goods, automotive, auto components, the consumer durable companies. I think numbers have been pretty good and much better than expectations. So I think you'll have to wait for some time till the primary market supply pressure eases. But overall, I think it's a good stock specific market where I think there's a lot of opportunity available. And I think with macros improving, interest cuts down, GST cuts announced, I think the real impact of the earnings is going to be reflected in Q3. So I think we'll have to wait for that time. But nevertheless, I think, this kind of volatility will continue.
Okay. So, Avinash, how are you looking at the opportunities in this very, very volatile market? We constantly keep going up and down at this point in time. What are you advising clients? What's the best way to start looking at their portfolios? Should one use these dips to continue to accumulate fundamentally good stocks? Or are you finding newer opportunities? How are you looking at this current space? This is also the time when earnings are getting a sharp reaction from the markets as well. Every good earning is rewarded, but every bad earning is also seeing some cuts in the stocks.
No, I think if you talk about opportunities, Sakshi, I think, we are quite positive on the automotive, auto component pack, the hospitality, the hotel sector, and of course, the banking and the FMCG sector. I think banking is one of those sectors where I think the PSU banks are available at a very attractive valuation. Numbers have been also been pretty decent, especially if we look at companies like Canara Bank, PNB, Punjab National Bank, and I think IT cannot be ignored. IT has been a surprise pack. You have seen numbers from HCL Tech, Coforge. So, these are sectors which are now slowly showing some sort of turnaround signs. So, I think, of course, FMCG has yet not turned around. We have not seen that kind of volume push. But I think the third quarter should be good. I think if you look at the commentary from the HUL management, they clearly hinted that the October to December volume growth could spike up because of the GST cut, entire benefit getting in. So, I think broadly, the domestic theme looks to be pretty solid. IT is a surprise pack because despite the headwinds, these companies have shown pretty strong numbers. So I think it's a pick and choose market. I think you've got to slowly construct a portfolio which is now going to be structurally headed for a very good earnings kind of recovery, especially from the second half of FY26. So I think net, it's a waiting game. We'll have to wait for some time. But after the Q3 number, the markets are definitely going to be pleasantly surprised with the earnings growth trajectory, because that is going to be the main engine which is going to drive the market going forward.
Okay, fair point. When we've been talking about the kind of investment opportunities that exist, viewers, we've been talking a lot about gold and silver prices over the last 1 or 2 quarters. We've extensively discussed with you various data points as well. And a fresh data has actually come in today. And this has been released by the World Gold Council, which actually shows that the true extent of the impact of record high prices in gold and silver has actually been on the gold demand right ahead of the festive season in India. What have we seen as per this data? Overall demand for the yellow metal, that's gold, has actually plunged by 16% on a year-on-year basis, with sales of the jewelry down by 31%. Demand for gold jewelry was the lowest in 5 years since the COVID pandemic in 2020. What we've also given to understand is that investment demand, however, actually grew by 20%, showing that optimism that Indians have in the potential of the yellow metal in the longest term. Now remember, imports of gold in this period were also down by 37% as well, which actually reflected lower demand and therefore the lower imports as well. Now, the much higher prices also ensured that the value of jewelry sold remained on par with a year ago period. So the, kind of volumes were lesser, but the kind of value equation that we got was almost same because the prices were much elevated when we compare to a year ago period. Now, for more on this, let's also welcome our guest on board. Ajay Kedia is also joining our panel, MD and Director of Kedia Advisory. Warm welcome to you, Ajay ji. Good to have you with us. Well, first up, I want to understand from you, how are you assessing the entire gold market at this point in time? So far in the run-up to Diwali, we were constantly finding out as to whether we are reaching a bubble territory, how much more to go. Finally, after Diwali, we have seen prices ebb down, both for gold and silver at this point in time. And now the new world gold data tells us that in this run-up of the record high prices, demand has fallen in India for both gold jewelry as well as Physical gold as well, but investment has gone up. How are you looking at the current scenario?
So, Sakshi, you have rightly mentioned that the volumes have been continually dropping because of high value, we can say. Because the data even shows that jewelry demand has dropped by almost 23% as the high prices was the major concern. Recycled gold has came in the market. Secondly, the investment demand is more important because here we have seen investment demand was around 91.6 ton versus 76.7 in a year ago. That clearly shows people are more looking gold as an investment product because of ongoing channels going on in the market. Even our investment demand in ETF has inflows showing
Yes.
around 134%. So I think with the given concerns, gold is going to be a primary good gain. But yes, there could be not a bubble, but yes, there is a time when we see this type of profit booking. What we have seen last 10-12 days, gold has corrected around 11%, whereas silver has corrected around 18%. So maybe we can see some more profit booking because ETF was the major chunk what we have seen in last 6-8 months that has invested in bullion, and now things are been maturing. Whatever the factor up till now we have seen like geopolitical tension or trade
Sure.
tension, everything has been now on the verge of maturing. So I think a profit booking could
Absolutely.
be there.
So more profit booking means what is the level in the near term that you expect for gold and for silver? How much lower can they go from the current levels, Ajay ji?
See, I think volatility is too high right now. We have seen already $500 correction in gold in international prices. Maybe a little bit bounce from here can be possible, but by year end we expect 3650 level in international, whereas on domestic side a level like recently we have seen prices move below 118. So maybe 112, 1,12,000, 1,13,000 could be the fair price for gold, whereas silver is slightly more volatile as of now. Maybe we don't expect silver to fall more from here because industrial demands are quite good. But despite that, we expect 1,40,000 is an immediate support. But a level like 128, 130 is going to be a good level where one can look for buy, looking to the fundamentals at that time.
Okay, let me bring in Avinash Ji here into the conversation as well. Avinash Ji, one clear fact that we are getting from World Gold Council meeting and the report is that ETFs investment has gone up by 134% on a year-on-year basis. That actually shows us the entire shift. Whereas the demand for physical gold, demand for jewelry was ebbing lower, global demand for ETFs has suddenly risen so much. How are you assessing this as a market participant? Your clients must also be, constantly quizzing you about as to whether this is the best way to invest in gold and silver. How are you looking at the ETFs journey in gold and silver?
Oh, exactly. I think, see, there are a lot of investors who want to participate in gold. And I think gold as an asset class, I think everybody wants to keep them in their portfolio. So rather than buying physical gold, Sakshi, I think ETFs are a much better option. They are less cost expensive. More importantly, they are liquid. They are traded at any point of day. And unlike a physical gold, where you go to the jeweler and some making charges or some extra charges the jeweler cuts. This is a very liquid instrument. So, to that extent, it's a very feasible instrument for not only small investors, but even large institutional investors. And I think gold ETFs are very, less risky as compared to buying physical gold. So typically, the volatility in the gold prices is also something which the ETFs take care of. Of course, ETFs are meant for investors who take a 3 to 4 year kind of timeline, and these are not short-term instruments. But either way, you want to create a good portfolio of gold in your portfolio, then I think ETFs are the new trend, and I think this will continue going forward also.
Okay, got that. Let me also bring in Ajay ji here. Ajay ji expects that by the year end, there could be some more volatility and we can expect gold prices to ebb lower even further from here. More profit booking, 1,12,000, 1,13,000 kind of levels can be seen. So Ajay ji, help us understand. A lot of investors must now be feeling, those who did not get a chance to participate in the swift run-up that we actually saw are now looking at this as an opportunity. So they're monitoring the prices every day to find out, when can they take an entry in gold and silver. What are you advising those investors right now?
Yeah, because already the asset class like gold has given a return of 70%, then how you can expect further more return what we have seen last year? So I think, see, whenever this type of parabolic gains comes in bullion, generally we see a time correction. So I think one should wait, don't be hasty to take position right now, because whatever the worst up till now, war, tariff, central bank, everything has been discounted in last couple of years. I am more bullish on silver because silver is having a industrial consumption right now. Around 56% silver has been consumed in clean energy, and the shortage, as we know, industrial shortages are still going on. So maybe a corrective dip in silver would be a good level to re-enter. What I have suggested around 100, 1 lakh 18, 1 lakh 20 is going to be a fair price where you can start looking for silver, despite it has doubled in last 1 year period, but still in international we are expecting $72, but it will take another couple of years to reach that level. But currently I think other asset class are very cheap as compared to gold right now. So either prices should adjust themselves, or a correction should be there. Then only one should go for an investment. If you have having any marriages at home, definitely for consumption go for gold and silver, but for investment it's not rightly advised right now. One should wait for correction or consolidation, then you should enter.
Okay, very clear view that is coming in, viewers. You must understand that there is a difference between, purchasing gold and silver for consumption and purchasing gold and silver for your investment portfolio. And there are two views that Ajayji has shared here. In case you have needs at your home, maybe you have a wedding coming up, you have to buy for personal consumption, go ahead and use these dips that we have seen right now to purchase gold and silver at this point in time. But in case you're looking for your absolute long-term investment purchases, there are other asset classes that are cheaper. Like look at stock markets, they have not given any return potentially over the last 1 year. And right now they seem to be much cheaper than gold and silver at this point in time. We'll come to Avinash ji on what is the outlook for markets. But Ajay ji, just one question before we let you go is, if somebody is waiting for the prices to dip further, you've given us the levels where they can actually potentially enter. What can they actually expect as returns going forward then?
Whenever Sakshi, this type of parabolic returns comes, one should have, because already in 2011 we have seen gold prices tested the level of 1920, and it has taken almost 8 years to achieve that level again. So I think for coming 1 year, if everything settled down, I don't expect gold will beat the inflation also. It should be consolidating. It depends upon how in next couple of months the carry trades would be following the market. Donald Trump, how the relation between US and China will mature. So I think from the return point of view, whatever we have seen 20% return in last 3 years will not be seen in 2026 as of now is my calculation. But yes, silver might give another 12 to 15% return if prices correct from here and make a base around 1,18,000, 1,20,000.
Fantastic. Thank you, Ajay ji, for all those insights that you've shared with us. Good to have you with us. Avinash ji, when we talk about the other asset classes like equities, which have been underperforming, if somebody wants to invest in equities looking at, that it is attractively better placed than gold and silver, which have already had such a sharp run up, what is the kind of expectation that one can go forward with on the equity returns, say, from 1 year from now?
No, I think, gold, silver will continue to be in demand. And I think broadly, my sense is that you mentioned about what kind of allocation you should have. I think clearly, for an investor who's already invested in equity, I think he should keep some pocket of opportunity for gold and silver. I think it could be in the form of gold and silver ETFs, or maybe companies which operate in the gold and silver space. I think we continue to be positive, on the gold finance companies, because actually, the fact of the matter is that gold prices are not going to go down significantly, and there's no panic. In fact, gold finance companies deal with finance which is financed against gold, jewelry and ornaments. So, this is a very safe business. Something like a Manappuram or a Muthoot Finance typically can give you multiple returns, provided you can invest and sit on these companies for a long time, because demand is huge. And I think, in India, almost every family has got gold in their, residential houses. So the amount of opportunity to scale up is pretty huge. And this is a very concentrated business. You cannot find many large players. There are hardly two companies, Manappuram and Muthoot. And of course, you want to bet on the gold and silver price. I think, silver, I think Hindustan Zinc is a kind of a bet, which I think you need to obviously look at it from a longer term perspective. But I think one thing you must remember, that these are commodities. So the cyclicality and the volatility in these stock prices is going to be quite significant, like metal companies. So I think net, I think you need to keep a small exposure. You can either buy gold or silver ETFs, or you can take a direct call in any of these companies I mentioned.
Okay, got that. So some allocation in your investment portfolio has to be there for the long term to balance out asset allocation in your investment portfolio, since India is a country which is being seen as a huge consumer of gold and silver, and that's not going to go away anytime soon. Prices may be volatile, but you have to keep an eye out on the long term. So either by way of stocks that Avinash ji has mentioned or ETFs, you have to have some allocation in your investment portfolio. Now let's come back to the stock markets after this gold discussion. Avinash ji, you were also talking about the IT companies there. In fact, yesterday we've had the Business Today AI Summit where Infosys co-founder Chris Gopalakrishnan was with us. And in fact, he has warned that India must now build strategic tech autonomy and retrain its workforce to stay relevant in an AI-powered world as well. Speaking at this summit in Bengaluru, the tech veteran has said that India actually stands at a crucial inflection point and that AI will reshape every industry going forward. Let's first listen into what he had to say and we'll come back to a conversation there.
Every industry, every sector, how every person works is going to change in the future. So it's clearly an inflection point. The opportunity for us, and we have to look at opportunities in different segments or sectors. If I take IT services industry, because I think that must be also in the top of mind for many people. Any dramatic change in technology means more opportunities for creating new applications, creating new capabilities, doing things which hitherto were not possible, doing things faster, cheaper, better. In the normal business cycle, this means more work, more business. It also requires them to retrain all their employees. It's just not all their employees, but all of us will also have to be retrained to use AI effectively. If you are creating a PowerPoint presentation or writing an article, if you're not using AI to do that, you'll probably be only 50% efficient or 20% efficient. Because AI can actually double your productive capacity, speed, maybe 5 times. So it's an order of magnitude sometimes better, faster. So they have to retrain all their employees. That means 5.5 million people have to be retrained. And then you add the people to be retrained in the industry. That's a large number. So the key message here is, in such transitions, industry needs to be relevant, individual needs to be relevant with new capabilities. And if that is possible, then they have work, they have job, etc. Good question. And a lot of people have asked why products don't come out of India quite often. But the business model is different, right? Again, capital market access. The domestic market is not big enough for us to actually create a product successfully in India and then take it to the world, right? Most products really go out to the US first, because that's the largest market, largest economy, etc. And so knowing that market very well, having the marketing and the brand visibility in that market is very important. And the business model is very different. Services model is very different. Indian companies have mastered the art of services.
All right, so that's as far as our AI special conversation was concerned with Chris Gopalakrishnan. Let's quickly look at how the markets are going to be shutting shop today, and we'll come back to a conversation with Avinash ji right after. 167 points lower in trade, so we are at 25,887. We're off the lowest point absolutely, but we've actually stayed low for the maximum part of the day today, and ending just near the low point of the day as well. So the markets overall have slipped, and that's the final print, 25,891 on the Nifty. Let's look at the Nifty Bank as well and see how the markets are moving as far as the Nifty Bank is also concerned. Today, even the banking space has actually declined in trade. You can see about a 0.5% decline coming in. Again, like we were talking about the Nifty, it's also slid low and it's also ended near the low point of the day as well. Let's pull up the mid caps and the small caps as well for all our viewers to see how the broader market space, where the mid cap stocks and the small cap stocks trade, how have they performed? Just about slightly better off than the mid caps and the larger indices. But look at the kind of weakness that we have seen through the course of the day. It's almost similar. It's just off the point of the day, but 0.1, 0.2% kind of a lower closing is what we have on the mid and the small caps. Sectorally, all the sectors in the red. What has saved the blushes is the real estate sector. Let's pull that up. Just minor green is what it has managed towards the end of the session after staying low for the largest part of the day. So you can see a swift pickup that has happened and it's pulled up 0.04% higher. But rest, all of the sectors are down. Financial services, private banks, they're all down in trade. IT is down in trade. FMCG is also down in trade. Let's also pull up the stocks there. Let's start off with the gainers. Coal India, L&T, BEL. These are the stocks that have bucked the trend in trade today. About 0.5% to 1.5% moves on the higher side. Hindalco, Nestle, Ultratech Cement. These are all the other stocks that have also pulled up. On the declining side, let's actually look at the stocks that have actually pulled down the stock. So pharma names, Dr. Reddy, Cipla, HDFC Life from the life insurance space. Again, a 2% fall there. Bharti Airtel, Power Grid, Tech Mahindra, these are all the stocks that are down. So Bharti Airtel from the telecom space, Power Grid is from the power space, Bajaj Auto from the auto pack, IT names again, Infosys, all have declined in trade. So a weak trade is what we have had in today's trading session as well. Let's come back to our conversation with Avinash ji. And Avinash ji, first, we were hearing out Chris Gopalakrishnan, who was talking about the big AI push that India is at an inflection point and has to cater to that as well. A lot of investors are also starting to look at AI-related themes that could turn out to be the big wealth creators probably over the next 5 years, 10 years odd. Have you also assessed what's the India AI opportunity within the stock markets right now? We don't have a company like NVIDIA globally or an open AI, so to speak. We have large tech players like TCS, Infosys, Tech Mahindra, or we have some specific companies that are probably dealing with semiconductors, data centers. How are you looking at this big AI opportunity? Any stocks that come to your mind as well?
Yeah, I think you mentioned something about data centers. In fact, there was some problem in the audio, but I think what I understood is that stocks which have got some correlation to data centers. I think definitely one looks at this sector now as a important sector within the artificial intelligence space. Because clearly in the next say 4 to 5 years, you're going to see a lot of artificial intelligence coming and taking away the basic kind of jobs in most of the corporates, and to that extent it's going to be used as a very good cost cutting tool. I think there are manufacturing sectors in India which are already started working on it. So I think you need to be a little vigilant. As of now, I don't think there are many proxies which clearly justify artificial intelligence stock. But I think within the IT pack, most of these companies have started working on AI, machine learning, and obviously on the product development application. So I think we'll have to wait and watch, Sakshi. I won't be able to, talk about any company here because frankly, there are not many companies which actually qualify in the artificial intelligence space as a fully focused activity.
Okay, let's take one query that has come in from our viewers, Avinashji, for you. This is Amit Malviya from Dehradun. Wants to know about the pharma sector earnings. Are they looking good? And is it the right time to invest in pharma sector? How would you assess this one?
See, I think pharma sector definitely looks promising, but hopefully, some good news comes from America. Donald Trump announces the import tariff policy quickly. I think you could see a significant run-up in stocks where companies have got a large exposure to the US market. I think structurally, we are positive on companies like Lupin, or for that reason, Sun Pharma, typically Aurobindo Pharma. So I think clearly, these are companies where significant re-rating can happen because once there is policy clarity, and there is a kind of a open-minded approach from the US government, I think most companies will be looking at it as a positive development. In fact, in terms of numbers, Dr. Reddy posted a decent set of numbers. So I would say that, you have to create a basket of companies which have a large exposure to the US market. I think the portfolio choices are definitely important, and I think you need to take a slightly longer term call here. So I think within this, you could possibly
Right.
look at
Right.
biotech or maybe the domestic plays also.
Absolutely. Avinash, thank you so much for all those insights. Good to have you with us as always. And viewers, we're out of time. It's a wrap on the Business Today show. And in case you too have any questions about investments, SIPs, stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens right there. And don't forget to catch up on the market opening action with Abba Bakaya at 9 a.m. tomorrow.
Motorola Edge 60 Pro, the true flagship killer.
अरे बेटा ड्यूलक्स है और उसकी वारंटी तो और भी शानदार।
पेंट से भी शानदार
वारंटी
से शानदार पेंट
से शानदार वारंटी
से शानदार पेंट
वारंटी।
ड्यूलक्स, डिसाइड करना मुश्किल हो जाएगा कि पेंट ज्यादा शानदार है या उसकी वारंटी।